and we're ready to roll. Okay, so let's go ahead and go through our chapter 1 part 1 material. Okay, and these slides, guys, are again up on iLearn. If you didn't get them today, in the future I would recommend that you get the slides off of iLearn. For example, next time chapter 2 slides. You can probably bring chapter 1 because we're going to probably finish chapter 1 next time. This is a good way of printing them, so you save a little paper and then you can write whatever comments, or sometimes you can do like 3 slides in the speaker notes, or they give you little lines for notes next to that. You could do that as well, okay? But it'll give you a chance to make some of the notations. If there's something that I talk about that you don't understand, you just get that video off. Well, if you can't, you want a little more reinforcement. I'm not saying. If you don't understand what I say now, watch the video 52 times until you understand it. You could always ask me. But if there's something that you want a little more reinforcement on, you could go ahead and watch this again. Okay? That's the intent here. All right, so let's go ahead and let's take a look at chapter 1. Now, we talk about government and not-for-profit. When we say government in this class, what do we mean by government? Well, you know that there's the federal government, there are state governments, and then there's city government, county governments. We consider those local governments. In this class, we rarely talk about federal government accounting. Federal government accounting is something that is highly specialized. If I was teaching this class in Washington, D.C. or the surrounding areas, I might cover federal government accounting. For this class, we focus on state and local government accounting only. State and local government. So we talk about the accounting for the state of California. We talk about the accounting for the state of Rhode Island. We talk about the accounting that would be used by the city and county of San Francisco. We talk about the accounting that would be used by the city of Hayward. We talk about the accounting that would be used by Alameda County. You're going to have to get used to hearing about Hayward in this class because I'm born and raised in Hayward, so I have to mention Hayward all the time. And I recently, about 9 years ago, I made a big move from Hayward. I moved to Castro Valley, okay, which is 7 miles away from Hayward, okay? So you have to hear about Hayward all the time in here. But that's the focus, not federal government accounting, okay? Federal government accounting is not tested on the CPA exam. It's only state and local government accounting, okay? Now, we will talk about general purpose governments, like state governments have general purposes and that they do a lot of different things. City governments have general purposes. They do a lot of different things, like they have public safety, fire and police is a public safety function that that city governments have. They also have cultural functions that they're involved in. They have water and utility functions that they're involved in. And so those are considered general purpose governments because they have multiple functions that they're involved with. You also have something called special purpose governments. Special purpose governments have a singular purpose, and we will see that the accounting is very similar to the general governments, but they have a singular purpose, such as a school district's singular purpose is what? The children, teach the children. I believe the children are the future. All that stuff is their objective, right? Okay, and so you have general purpose government, states, cities, counties. Then you have special purpose governments with a singular purpose. For example, school district is a classic example of that. Okay? Okay, good. Now you come over, and when we talk about not-for-profit organizations, we are talking about organizations that the way we really distinguish those is they are pretty much exempt from taxes. Not-for-profit organizations do not have to pay tax typically. So your churches don't have to pay tax. Your programs to help individuals that have drug issues, etc., are not-for-profit. Organizations to help animals are not-for-profit organizations, right? And they don't have to pay tax. Now, we're not going to talk about tax issues in this class, but we are going to understand the accounting for for not-for-profit organizations when we get to the back end, and that the accounting is a little bit different in the way information is presented. So it's similar to commercial, but the presentation of the information is a little bit different, and we'll focus on that as we get to the back end of the course. Okay. Now, when we talk about not-for-profits and government entities, they lack profit motive. Now, you say, okay, obviously not-for-profits aren't trying to run a profit. Governments, okay, I get it that they're not trying to run profit. But you need to start to adjust the way we have talked about accounting to you up until this time. Because we've been spending a lot of time with you as you've come up to this moment where you can take a governmental not-for-profit accounting, focusing on the income statement. Revenue recognition, we spent a bunch of time with you on, right? Expense recognition. How do we calculate net income? How do we present net income as we're dealing with operating and non-operating activities? A lot of focus on the income statement, and then a lot of focus between the balance sheet income statement connection, right? Close income to retain earnings. Balance sheet's got a balance. We have our accumulated depreciation, our capital maintenance, really focusing on profit motive type entities. Okay, now we're going to see that our entities are really going to pretty much break even, and our focus is going to be more on what? The efficient, effective delivery of services. So we're really focusing on how are we delivering services, and when we look at those services, we're going to look at them by the type of function they are. Is it public safety? Is it water and sewer? And depending on that function will be how that is presented. Okay. When we're dealing with not-for-profit entities, we have the question of how is my contribution going to be spent, right? Okay. Now, when we look at the entities that set accounting standards for state and local government and not-for-profit organizations, when we're dealing with state and local government, we're looking at the Governmental Accounting Standards Board. The GASB is the entity that sets accounting standards for state and local governments. Governmental Accounting Standards Board, the GASB. The GASB is basically the sister organization of the FASB. They both fall under the Financial Accounting Foundation, which is the entity that is responsible for the appropriate funding of those organizations. But the FASB writes the accounting standards, and you've been dealing with the accounting standards for the FASB, whether you knew it or not. You were dealing with it in Accounting 100. You were dealing with that in 301. If you took 302, that's all FASB, Financial Accounting Standards Board standards. Okay? How many members are there to the FASB? Good. Who said that? Good. 7 members to the FASB. Why 7 members? Why not 8? Why is it an odd number? So when they vote, there's a majority, right? And you have to have a simple majority to pass a new accounting standard. Okay. Years ago, I was on an engagement where the GAO, where Congress asked us to look at the standard setting process in the United States. And so we looked at the Security Exchange Commission. We started with them. SEC said to us, you need to talk to the FASB because we've delegated the accounting standard setting process to the FASB, so you should talk to them. SEC contacts FASB. You need to meet with the GAO. So when we meet with FASB, we can only meet with 3, 2. You can't meet with 4 because if you meet with 4, they could potentially do what? Set policy in that meeting, right? And then there would have to be an announcement for that, and it would have to be a public meeting, etc. So we would meet with 2s and 3s, etc. But they write the accounting standards that you've learned about in your intermediate accounting, your introductory to accounting for what? For-profit entities, but it turns out that they also write the accounting standards for private not-for-profit organizations. So when we start getting to chapters 13, 15, 16, whatever it is, that is going to be back to the FASB's accounting standards. So you're saying, well, why do we need a special class about that? Because the presentation of that information is what? Is different than what you would do if you were a for-profit organization. Okay? We spend more time, probably what, 2/3 or 75% of the course looking at GASB, because GASB is an entire standard setting body that does what? That writes all the standards for a particular area of accounting dealing with state and local governments. Okay, but they are part of the same organization, the Financial Accounting Foundation. How does FASB get its money? How does the FAF raise the money that goes to FASB? There was a time where basically there would be members of the Financial Accounting Foundation, like GE would be a member of the Financial Accounting Foundation. They would decide how much money to contribute to the Financial Accounting Foundation that then would trickle down to the FASB. Is there a problem with that? What's the problem with that? Yeah, if you're GE, you say, FASB, we don't like that one. That one doesn't work for us. Why don't you change your mind? That's them pretending like they're reaching in their pocket or putting money back in their pocket, right? And so what happens, that was a problem that we talked about when we looked at the accounting standard setting process back in the 90s. We said, hey, there's some problems, conflict of interest, the way things are funded. Congress didn't do anything about it at that time. What happened in 2002? Sarbanes-Oxley, good. Enron, WorldCom, all those problems came, and Sarbanes came down and said, okay, if you're a public company, you got to pay to play. You want to be a public company, you're going to have to pay a fee, and that fee will be used to fund the FASB to put another mechanism of independence there. For the GASB, basically the entities that underwrite state and local government bonds, they have to pay to play, and they fund the GASB. So they made it a little bit more independent in terms of how these entities now get their money. But they're both in the same building in Connecticut. They both share the same building. FASB takes up most of it. They gave GASB a couple little funky offices off into the corner, and but FASB and GASB both are sister organizations. Okay. FASAB, the Federal Accounting Standards Advisory Board, is made up of three agencies: the Office of Management and Budget, Treasury, and the GAO, and then there are additional agencies that rotate through for that board's 7-member process. GASB is a 15-member board. Okay, so these are the entities that will set the standards that we're going to be talking about in this class. And we come over, and when we look at our financial reports for state and local government, we are basically seeing that money is spent for its intended purpose. Are we spending money for its intended purpose, and are we spending it in the correct amounts? Okay, so what happens? We're going to go ahead and test my artistic prowess today. So what is this? Huh? See what an artistic genius I am? That's a road, okay? Good. And what happens? We go ahead and let's say we set up a gas tax. We set up a gas tax, and we say that that gas tax will be used for road improvement. Okay, we'll use a gas tax for road improvement, and we say that the amount that can be spent, just making up an arbitrary number here, let's say it's $1 million per year or something, because we don't want to run through all those funds in 1 year or whatever. I don't know. Okay, so what we would do is we would use our governmental accounting to make sure. Okay, there's a couple things that are going to happen in this class, and I forgot to give the speech about why you will hate me. Okay, by the time this class is over, you will hate me for 2 reasons. One, I will hound you about your attendance. When I said what, you can miss 4 classes, what happens if you miss 1 class? You get an email from me saying, look, if you're not into this class, you need to drop it. I mean, just get out now. Okay, so you're going to say, but I have 4 classes. So that doesn't mean that I can't point out to you that you're missing class and you need to get out of the class before it's too late. Okay, and so I'll send you an email like that. Think of those 4 classes as an insurance policy in case something bad happens, right? That's why you pay the insurance on your car in case something bad happens, right? So how many accidents do you get to on purpose? Since you know you have insurance. No, you're right. You're not going to do it on purpose, right? So those 4 days are not vacation days. So I'll hound you on that, and I'll keep saying, hey, you need to do the attendance, etc. Okay? The second reason you'll hate me in this class is because you'll decide to do little text messages and things like that during the class. That's not going to work. Okay, well, we're not here to keep up on your, Facebook account. Okay, if you need to do that, then you're better off, taking three. What time does this class start? 3:35 to 6:20 on Thursdays to update Facebook, and just do that. Okay, and then you feel good and you don't have to worry about being busted out, because I will bust you out if I see you on Facebook, okay, or on whatever, something that's not this class. The third thing you're going to hate is I'm going to see you using your laptop, and I'm fine with you using your laptops and your tablets and all that. That's fine. But when I see joy on your face, I know you're not looking at governmental accounting. That's how I know, okay? And so I will come over to you and I will say, stop that. Don't sit here and watch, Ren and Stimpy cartoons or whatever, whatever, Beavis and Butthead, whatever cartoons are famous these days, Woody Woodpecker, whatever, okay? Now, last semester I had somebody who got upset at me because they said, I'm not watching any movies or anything. Meanwhile, they were sitting in that back row, and I could see the movie in the reflection in the window back there. And I kept saying, no, you're watching something, And look, partially I have to do that because I want you to pay attention. Partially, I don't know what you're watching. The person next to you may be going, oh my God, what is this person watching? So, I've got to bust you out when you sit there and do those things. So, you will not like that. You'll sit there and say, I hate this guy. He makes us pay attention in class and makes us be interactive with it. So think about that now. It's not too late, right? You maybe will get into another class where they'll let you do whatever you want. Okay? All right. So we have what? We have this road improvement, and we would use governmental accounting to make sure that we spend this money in this what? In this gas tax fund, that we spend it on what? Road improvement, and we spend how much? $1 million. So we're having a much different focus for our governmental accounting. Are we spending the money for its intended purpose, right? Now, when we deal with these governmental reports, we're going to see that we are going to be dealing with actual data, but we're also going to be dealing with budgetary data as well. Now, this is where folks say, oh, governmental accounting is so hard, because you're going to have to sit there and learn not only the actual accounting, but also how do we set up our budgets, okay? So that's going to be something that is fairly unique for you for this class, because what state and local governments do for their budgetary accounting is special to state and local governments, and it is standardized as to what all state and local governments have to do with their budget. That's why for those first 4 chapters, we were hanging around on those until it was already March or something, wasn't it? We're still dealing with those first 4 chapters because I want to make sure that you are comfortable with the budgetary accounting, which is the part that tends to be a little bit more challenging for you. So we're going to be looking at actual activity, but also what? Budgetary activity as well. Okay. Now, when we look at this, we look at it both from a standpoint of financial condition, which is a focus, of course, on the balance sheet, but we're also looking at what? We're looking at the results of operations, which is what? Which is going to be the income statement. So we're going to have a focus on balance sheet, income statement. By the way, I'm not going to get into the name of the statements right now, but we don't call it balance sheet and income statement. We call it other names, but basically they are equivalent to the balance sheet and the income statement. We'll be taking most of our attention. When we do that, we're going to be looking to see that we are spending the money in compliance with decisions that have been made through laws, regulations. For example, we're going to spend money on road improvement, and we're going to be looking at efficiency effectiveness, right? We're supposed to spend what? $1 million on road improvement, okay? So we're going to have a focus of a balance sheet, an income statement, looking at compliance with laws, and looking to see that we have spent the money efficiently and effectively, okay? When we are dealing with governmental accounting, we're going to see this term interperiod equity. Interperiod equity means that we will spend only those resources that we have available for the period. We will not borrow to run our operation. So it's going to be revenues minus expenses. So we live within the current year's tax dollars. They call that inter-period equity, which means that we're going to try to balance the budget each year. Okay? Now, does the federal government balance its budget each year? Spend only what it takes in? Federal government spends more than it takes in each year, doesn't it? Okay. All right. So that means that the government has debt, doesn't it? How much is that debt? Huh? Almost 20 trillion. You want to say 20 trillion? No, it's more than 14. It's about 17, 18, but we can go up to 20 trillion because it will be there pretty soon. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 20 trillion? Okay. What was it when, you want to put that on Obama, what was it when Bush, the son, got out? Well, it's pretty close to 10 trillion. Let's just say 10 trillion. Bush 2. What was it when Clinton, the husband, got out? Huh? No, he had a surplus for maybe 2 years of the 8 years that he was in there. That surplus, when we talk about a deficit, the deficit just talks about 1 year's shortfall. The debt is what accumulates when you have deficits year after year after year. And so Clinton, the husband, Bill, he only had 2 years of surplus, and he left the government in a situation where they could have sustained at a surplus situation. And that's what Al Gore was trying to accomplish, that they would continue on with that surplus situation. And over time, they would eat away at the debt that way by taking the surplus and taking that surplus money and using it to pay down the debt. And then he would say, we'll take the interest savings from having paid down the debt, and we'll use that interest to pay down the debt some more. And the way he described that is he described it as a lockbox. I know, I feel like crying when I think about it too. He had talked about there being a lockbox that he would put the money in, and then they got on Saturday Night Live and kept making fun of him and say, oh, the lockbox, ha-ha. And everyone said, oh, we don't want Gore, he's boring. You know, he's boring. We don't want Gore, so they voted for Bush, okay? But when Clinton got out, how much was it? Clinton, the husband. It was 5 trillion. You see what happens when we make decisions like we don't want this person because he's boring? We want the funny guy to be our president, okay? So it doubled again. When Bush, the father, got out, it was 1.5 trillion. Okay? So they all take their turn doubling it, don't they? So when nobody wanted to vote for Hillary because they don't trust her. We don't trust her. Why don't you trust her? Was she not water your plants one day when you were out of town? I mean, what is it that you don't trust? What did she do to you that you don't trust her? Okay? And so now we've got what? Trump. So I guess he'll double it again, right? And it'll be 40 trillion? Why will it be 40 trillion when Trump gets out? Well, it always doubles, right? just the pattern, right? What could be some cause of that doubling? Huh? You got to build the wall. Okay, what else? Invest in infrastructure, which means they're going to update bridges and roads and all that kind of thing. Cut taxes, build up the defense, and deport everybody, right? Okay, so once you get through with all that, you've got $40 trillion, right? Now, what happened in when we doubled it here from 5 to 10, what happened after Clinton got out before Bush got in? September 11th happened, right, when Bush was early on. I think it was in the first 100 days of Bush administration we had September 11th, didn't we? Okay. And so what happens? This was the first time in American history that we had war and cut taxes at the same time. Okay. And so these things will continue to contribute to the debt. So, I don't know. But that has been the pattern. Okay, so the federal government does not follow the policy of interperiod equity because what? They spend more than they take in any period, right? State and local governments try to adhere to this idea of interperiod equity. Now notice we say here a balanced budget amendment supports interperiod equity. What is balanced budget amendment? Balanced budget amendment says that the federal government should balance its budget each period. What do they mean by an amendment? Amendment to what? They want to amend the Constitution to say that the federal government must balance its budget every period, right? Is that going to happen? Why not? How do you amend the Constitution? You have to first get it through Congress, don't you? And you have to get it through Congress by a 2/3 majority. Okay, no, 2/3 or 3/4? Huh? 2/3 majority. Then what? President. Okay, then what? To amend the Constitution, then you have to go to all 50 states and get all 50 states to ratify that, and not all 50, but 2/3 of the 50 states to ratify that by a simple majority, right? Why would the states do this? The states would look at that and say, well, if we tell the federal government to balance the budget, one of the things they're going to do to balance it is to cut funding to state and local governments, right? So why would they vote for something that's not in their best interest, right? Okay, this issue of sanctuary cities, okay, that they talk about, federal government gives a lot of money to state and local governments, and the way Bush is going to pressure cities in San Francisco, let me tell you guys, is probably number one on their list. They're going to sit there and they're going to say, well, we're just going to cut off the federal funding to you until you do the things that we want you to do. So hang on, this should be very interesting to see how this works. But state and local governments, state governments would not vote to amend the Constitution to balance the budget. That cuts the amount of money that would be available for the federal government to give to the state and local governments. So that'll never happen. Anytime somebody tells you that they're going to make a policy decision by amending the Constitution, they're lying to you. They're just saying words to you that sound like, oh, that guy's serious. He wants to amend the Constitution because he knows he can't do it. So he won't have to. So he can just promise you something stupid. Okay? All right. So let's just go ahead then. That's it for that speech. And take a look at what happens when we deal with not-for-profits. Okay? With not-for-profits, the key question that's being asked is, how will you spend my contribution? What happens? Not-for-profits rely on generous donations from individuals, right? The individuals don't want to give the money to help. I was watching one today to help the elephants. You know, I always watch these commercials of these not-for-profits that want money for animals, and I'm just always like, I don't know which animal to help. I'm worried about the dogs. I'm worried about the elephants. I don't know who to help. One time, the Wildlife Federation came to my door, and he wanted me to give some money, and I'm like, well, I don't know. I'm not sure which, organization I should give money to. You're part of the Wildlife Federation. What are you going to do to help him? And because the guy wouldn't go, so I said, well, what are you going to do to help him? And he turned around. There's a squirrel on the wire walking by, and he says, okay, and he left at that point. He's like, this guy's nuts, which he was right, okay? But when you give the money, you want to know, are you going to help the squirrels? Are you going to help the elephants? What are you going to do, right, to help them? Okay, so that's what we will be trying to demonstrate when we get to the not-for-profit accounting. Okay, now back to government accounting. When you pick up the financial reports of the city of Hayward, you will always see this model right here. Okay, the first thing you will see, and that's why I put a 1 there, is something called the management discussion and analysis. You will see the MD&A. That's the first thing you see. And in this management and discussion and analysis, they talk about financial aspects of this government. The MD&A is not there to say, oh, what a beautiful city. Look at how shiny City Hall is today. Or look at the beautiful skyline of the city. Or look at all the squirrels we have in the park. That is not what the MD&A does. It is talking about what? Financial aspects of this government. This is what our budget was. This is our variance from our budget. These are major projects that we have going on, and this is how they will use up resources, etc. But it's financial aspects of this government, right? Okay, that's the first thing you see, and it is a narrative written report about the financial aspects of this government. The second thing you see is the basic financial statements, and that's why I put a 2 there. That's the second thing you see. And the basic financial statements include a set of government-wide statements, a set of individual fund statements, and we always consider the notes an integral part of the financial statements, right? You've heard that before. So that's the second set of information you see. Government-wide statements, fund financial statements, and the notes there too. Now, what do we mean by government-wide statements versus fund financial statements? Well, you learned that in your I don't know, probably somewhere in intermediate accounting and more so in advanced. If you take that class, you learn that if you have a corporation and a corporation has various subsidiaries under their control, they are to do what? They are to consolidate those into a set of consolidated company-wide financial statements, aren't they? Okay. Well, what a government does, say, for example, the state of California, or say the city of San Francisco, they will take all of the individual funds that make up the entire accounting of the city of San Francisco, and they'll have different funds that we'll talk about. Some funds are considered general funds, some funds are considered special in nature, but we'll take all of those funds and we will roll them up into a set of government-wide statements. Now, for commercial accounting, you don't always see all the detail of the subsidiaries, do you? For what? For governmental accounting, we're going to have to learn both the consolidated piece, but also what? How those individual pieces feed in to that government-wide piece. So we're really going to be learning about two sets of reporting, a government-wide level of reporting and a individual fund level of reporting. Okay, so that's the second thing that you see are those basic financial statements, right? Are you lost? You're trying to add? Okay. We're really short on seats. Can you take this class on Tuesdays? At the same time?
But Tuesday I have other class.
Can you drop it? Okay, come on in and see me after, okay? Okay. All right, so what happens? We sit here and we have two levels of reporting, the government-wide and the fund level, right? Okay. Then we have a third set of information. That third set of information is something called required supplemental information other than MD&A. And that's the third thing that you see when you pick up these financial statements. And this has all kinds of schedules, etc. For example, they'll show you the comparison between the budget and the actual, those sorts of things, okay? Now, notice that we say required supplemental information other than the MD&A, and that means to you, therefore, that MD&A is what? Required supplemental information, isn't it? Notice I wrote RSI next to MD&A. So both the MD&A and the required supplemental information other than MD&A obviously is what? Required supplemental information. What does the required mean? What does the word required mean? You got to do it. You have no choice. You have to provide this information, right? What does supplemental mean? It adds on to something else. Well, the only thing up there otherwise is the basic financial statements, right? So this MD&A and this required supplemental information other than the MD&A are there to supplement, expand on the financial statements, aren't they? Okay, so we'll spend most of our time in the governmental part of this class right here, but you do need to understand this model and that this is required for all state and local governments. So if you're the state of California, do you have to provide this information? Yes, you do. If you're the city of San Francisco, do you have to provide this information? Yes, you do. If you're the county of San Francisco, do you have to provide this information? Yes, you do, because you're local government. If you're the city of Hayward, do you have to provide this information? Yes, you do. Okay, all state and local governments are required to provide this information, as part of their financial reports. Okay, question? All right, good. Let's go ahead then and let's take a look and see what happens when we have these government-wide statements. And there are two government-wide statements. There's a statement of net position, which is going to be like the balance sheet. And there is a statement of activities, which is going to be like the income statement. So we'll have a statement, the balance sheet, that will show our financial condition. We'll have a statement that will show the change in our financial condition. And whether you thought about it this way before, that's what an income statement does. It shows the change in your financial condition for the period. Revenues minus expenses left me with a net income. That net income added or subtracted, if it was a loss, to my equity for the period, didn't it? It was reported in retained earnings. Okay, and what? The financial condition of a company is the stockholders' equity section, isn't it? Okay, so the balance sheet talks about financial condition. The income statement talks about the change in financial condition. So we'll have a balance sheet and an income statement at the government-wide level, right? Okay, and we'll see that the names of those for the balance sheet is the statement of financial condition, and the income statement is called the statement of activities. Okay, this is a consolidated statement, so it gives us information as a government as a whole, and we will use accrual accounting, economic resources measurement focus, and we will be using operational accountability. Now you look at all that and you think, well, what the heck is all that? What's accrual accounting? What happens with accrual accounting? Huh? Recognize, okay, you just gave me an accrual accounting revenue recognition rule. Recognize revenue when earned. Take the transaction, the period in which when it actually occurs, when revenues earned, when expenses are incurred, all that stuff, right? But let's think back to a more innocent time for you. Remember when you were in the park playing with your mom, okay, and you saw a person heading through the park all stressed out or something. You said, Mommy, what does that person do? That looks like fun. I want to do that. And your mom said, well, that's an accountant. And you said, oh, I want to be an accountant when I grow up. That looks like so much fun, right? And your mom said, okay, you can be an accountant, but you have to promise you always use accrual accounting. You said, I promise, Mommy, I always use full accounting. Mommy, what's full accrual accounting? And, she always had that little whiteboard that she kept in her purse. And she says, well, dear, full accrual accounting is this. If you purchase something like a fixed asset, like a piece of equipment, you are supposed to debit equipment, say for $1,000, and credit cash for $1,000. Isn't that full accrual accounting? Right? If you purchase equipment, you debit an asset, don't you? Because that's going to have future economic benefit. Okay, so that's full accrual accounting, and if we're sitting here dealing with the government-wide statements, that's easy for you because you've known that since you were, what, 2 years old when that whole thing happened? When you decided you wanted to be an accountant when you were 2, didn't you? Okay, now what happens? We say that is also focusing on economic resources, and it's focusing on economic resources because what? Because we're maintaining our capital here, aren't we? Okay, and this is an operational accountability of focus because we're looking at how efficiently, effectively this government is operating, right? Okay, so we're at the government-wide level using full accrual accounting like you've known for a long time, and we're going to be what? Taking an operational accountability focus in the economic resources measurement focus. Now you come over, and when we talk about our fund financial statements, we're going to see that there are 11 funds, and these 11 funds now are going to fall into 3 categories. So we're going to have fund statements, 11 of them, and they're going to fall into what? Into 3 different categories. Now, you look at this, go back to the reporting model here, guys. Notice what? Government-wide statements, there's going to be what? The balance sheet, the income statement, right? Like we talked about, although we don't call it that. And then you're going to have all those 11 funds. Those 11 funds are going to be what? Rolled up and consolidated and then reported what? At the government-wide level, right? Those are our 2 levels of reporting. Individual funds, 11 of them in 3 categories. And then what? And then the government-wide statements, which rolls all those up, right? Okay? So you come over and you take a look at the 11 funds that fall into 3 categories. We have a governmental fund category. We have a proprietary fund category. And we have a fiduciary fund category. 3 categories. Governmental fund category has 5 funds. There's a general fund, special revenue fund, debt service fund, capital project fund, and a permanent fund. You look at the proprietary fund category, there are 2 funds. There's an internal service fund and an enterprise fund. And then when you look at the fiduciary fund category, there are 4 funds: pension fund, agency fund, private purpose trust fund, and the investment trust fund, rounding out our total of how many funds? 11 funds falling in these 3 categories. Now, sometimes students will sit there and say, how do you just rattle that off? Well, I just always remember grasp, see, PAPI. Grasp, see, PAPI, grasp, see, PAPI. Some people say, that's not PAPI, John, that's Poppy. Whatever. Grasp, see, PAPI, okay, which is what? General fund, special revenue fund, the R in GRAS. Then what? The S in GRAS, debt service fund, capital project fund, permanent fund. GRASP is spelled a little bit funny there, isn't it? Okay, but that's our GRASP funds. Then what? Then we have our internal service fund and our enterprise fund. That's C. I know there's an E missing, but I'm just trying to make you kind of remember by remembering GRASP. C, PAPI, and then when we get to the fiduciary fund, we have what? Pension fund, agency fund, private purpose trust fund, the investment trust fund. Those are the 11 funds that will be rolled up and reported at the government-wide level. Okay, and we will also have them being displayed at the individual fund level as well. 2 levels of reporting, right? Okay, now we will spend most of our time in this class with these governmental funds. Okay, we will spend lesser amount of time with these other funds because most of the difference between governmental accounting and what you've been used to for a long time in your commercial accounting fall in those governmental fund category of funds, those 5 governmental funds, and so we'll spend more time with those. Okay? All right, good. So this little slide here is intended to help you simply remember what we just said from that previous slide. How many categories of funds? 3 categories of our governmental funds. We have the mnemonic what? GRAS, general fund, special revenue fund, debt service fund, capital project fund, permanent fund. Then we have our fiduciary fund category, which is what? Our pension, our agency, private purpose trust fund, investment trust fund. Well, not then. That's the 3rd category. And before that, we have what? Our proprietary funds, C, PAPI, our internal service fund, and our enterprise fund, right? Okay. This is going to answer, guys, a bunch of questions on the test that you're going to have to understand the categories of these funds fall in, and you're going to have to know something about the type of accounting that they use, their measurement focus, and unique aspects of the type of accounting that these use. Okay, and I'll get into that more probably next time. But before we go much further, I just want to leave you with a visual here, okay, as to how these 2 levels of reporting relate. Okay, so what you're looking at right here, it says consolidated. So if this is consolidated, that means that this is the government-wide statements, right? We said there'd be a set of government-wide statements. Remember that? Okay. And notice that we're sitting here and we have our governmental funds. Governmental funds are a consolidation of my governmental funds plus one of my proprietary funds. Okay. Then what? Then I come over and I have my business type activity. You see that E? That's the E in CPAPI. That's my enterprise funds. And what's going to happen? I'm supposed to consolidate these funds and report them at the government-wide level, right? Okay, so you come over and you take a look, and this next slide is simply the bottom part of this statement. We have something called net position. Net position is like RE. What's RE? Retain earnings. Good. And remember, we had the two columns. We have the governmental activities. We have the business type activities. Let's just look over at this second column, my business type activities. You see that 1,835,000, which is like my retained earnings? You see that number? Everybody see 1,835,000? Okay. Now I'm going to roll down, and I'm going to come down to one of my fund statements, and this is for my proprietary funds, and the enterprise fund is one of my type of proprietary funds. It's the E and C PAPI, isn't it? Okay, and notice this government had two funds. It has water and sewer, and it has parking facility, and both of these constitute what? Guys, this would be a good time to not worry about something different in the order that you're seeing the slides and just pay attention to what I'm doing up here. Okay, we have what? We have water and sewer, and we have parking facility. These are both considered enterprise funds. They're both on an enterprise fund column, aren't they? Okay, so I add those two together, and that gives me totals here, doesn't it? And it gives me total for assets, and it gives me totals going over the next page for liabilities, etc. And I come all the way over to the total column. Do you see that 1,835,000 right there? Is that the same number? Is that the same number? Okay, so what do? When we're at the fund level, we simply do what? We simply roll up those funds, and then we report them what? Report them in a consolidating manner at the government-wide level so that it totals up to that same number up there, doesn't it? Which was just one column? This is just one column here, isn't it? Isn't this just one column? Didn't we just turn two columns into one column? That's just one column, 1,835,000. That's just one column, right? Whereas we were down at the fund level, it was two columns because we're at an disaggregated individual fund level, aren't we? Okay, so that's what's going to be going on with the difference between the fund financial statements and the government-wide statements. Government-wide statements are simply what? A consolidation of what you see at the individual fund level, aren't they? Okay, now all we did was we just did it for the what? For the business type activities here, which were our enterprise funds. We're going to see that we're going to be learning that we'll also be taking all of those governmental funds, the general fund, special revenue fund, debt service fund, capital project fund, permanent fund, and we're going to do what? We're going to roll those up and report them under governmental activities. So now there'll be 5 and 6 funds that will roll up into one column at the government-wide level, right? Okay. Now, before you panic, we're not going to have to learn necessarily exactly how we'll do the consolidation. We simply need to understand what funds go into what categories in the government-wide level. And you can see already that what? Here's my governmental funds. This is the S in CPAPI, so one of my enterprise funds, one of my proprietary funds, I should say, actually gets reported in the governmental column. We've already seen that the enterprise funds go here, and the proprietary funds don't get reported at the government-wide level. But we'll talk more about that later. But you can see that we're going to have to know what funds fall into these categories. I am not going to make you do a consolidation here. I'm going to talk to you about the process for consolidation, and if I can get them to come, I'm going to show you how, I'm going to ask MGO, show you how they would do this, how they would consolidate from the individual fund level to the government-wide level, but I'm not going to hold you accountable on test questions, etc., to be able to do this. Okay? All right. That's the relationship between the government-wide level and the fund level. Okay? And I think what we will do right here is stop. And when we come back on Thursday, we will go ahead and do three things. We will continue to talk about these fund financial statements and start to talk to you about something called modified accrual accounting. Modified accrual accounting is something that is used by the governmental funds. And we're going to see that that is the key difference between what you've learned already in commercial and what you're going to be learning in this class. So we'll talk about that. We'll talk about the accounting for the enterprise funds, the fiduciary funds. That's pretty straightforward. And then we will round out the back end of this lecture, and you will finally understand what that little picture meant. Where'd it go? And we'll pick that up because I know that that's just burning. You want to know what that was about, okay? So we'll get into that. That'll wrap up Chapter 1, and then we'll get into Chapter 2 next time, okay? Guys, take a look at the Chapter 2 slides. Download them, print them, bring them to class, whatever. You can bring them on your tablet. You can bring them hard copy, but bring them so you can make notes as we go through. Okay, guys, I'll see you Thursday. Can somebody turn that light on, please? Thank you. Hey, hi, 1 second. I need to do something here.